Well, Amazon could be hit by an FTC antitrust lawsuit later this month, with the action expected to target its popular marketplace. The Wall Street Journal reported that the online retail giant has not offered concessions in what could be the last discussions before a filing. But if it happens, is a breakup necessarily a bad thing? Joining us now, Tom Forte, D.A. Davidson Managing Director and Senior Research Analyst. He sees the potential for Amazon to overcome the risk like Luke Skywalker, who escaped from the trash compactor in the original Star Wars. Please, Tom, elaborate for us. And it's great to see you, by the way. So a last-minute escape from the trash monster, I suppose. I don't know what the FTC. I don't know what that says about the FTC in this analogy.
All right. So what it says is this: we just published our 26th white paper on the convergence of the technology and retail sectors. And this was third in a series of factors that could slow the share price of Amazon. So death of Amazon 3.0. Now, Julie and Brad, when I started the research in April, I didn't intend, or the outcome was different than my initial expectation. And the way that I think about it is antitrust regulatory risk is significant for the stock, but I do think there's a way the stock can continue to perform well. The reason I believe that is governments across the globe understand Amazon, Apple, Facebook, Google. They have too much influence on consumers' lives. They're considering new legislation, enacting new legislation, fining them, trying to block deals. I think Activision and Microsoft. And now they're suing them. But if you look at Meta Platforms and Alphabet, Alphabet's meaningfully outperformed since its antitrust lawsuit. And Meta Platforms is essentially in line. And then call it a worst case scenario where the government succeeds in breaking apart Amazon into what we think would be three natural parts: a first party retailer, Amazon sells products to the consumer; a marketplace, other companies sell products to the consumer on Amazon's platform; and a cloud computing business. And if you look at the sum of those parts, it's higher than where the stock's trading today. So I think there's an opportunity, like Luke Skywalker in the original Star Wars, for Amazon to escape from the antitrust scrutiny and for it to actually work for the stock.
Does that then create a vacuum of interest, at least from investors, in the other two parts of Amazon, given where the majority of those margins and profits are coming in from?
So what it does, or what it should do, is it should ease investors' concerns on these very alarming headlines that they're about to get sued for antitrust by the FTC. So the other thing that's important here is if you look at IBM and you look at AT&T, there was about a 10-year period of distraction where they managed through their own antitrust lawsuits. The good news for Amazon, if you go back in time, it's essentially in their DNA to manage the business with intense government scrutiny. Think about what they did when it came to online sales tax for more than a decade. And that was ultimately determined by the Supreme Court decision in 2018. So I think Amazon has the ability to deal with what could be a 10-year period of distraction from this antitrust lawsuit by the FTC. So less risk for Amazon shareholders than we initially expected when we started conducting the research in April, and the potential for a positive outcome if the company's broken into pieces, given our view that the sum of parts is worth more than the whole right now.
And so it sounds like you would recommend, I know you have a buy recommendation on the shares, Tom. What's the most valuable part of Amazon?
Well, I think the most valuable part is the cloud computing business, given that when you compare it with Amazon as a marketplace and Amazon as an e-commerce company, it has very attractive margins, and it still has a relatively elevated growth rate. So one of the other things we wrote about in our white paper is the challenge for Amazon stock is that its two most important businesses, cloud computing and e-commerce, are showing signs of maturation. So at some point in time, they're going to need new initiatives. We've talked a lot about what they're doing in healthcare, what they're doing in advertising, what they're doing in video. Those initiatives are going to have to meaningfully contribute to revenue, or we could see an air pocket, meaning a period of slower revenue growth while we wait for those new initiatives to kick in.